Everyone, welcome to AM Finance Academy. Here again I am making a new videos for you. So kindly watch this video till end. And पूरा last तक video देखिए. Actually, why I am making this video, especially I am repeating this topic financial management again and again. You will know that later. I can't explain all these things like meaning of financial management. So I can't elaborate all these things because you can get it from Google and you can get it from books. Also, you have studied in your academics in college, your schools, or everything, whatever the thing is. Especially, I am making this video for this reason. Especially, I have said you in the first video that I am making the video for interview purpose, especially when a finance student or a finance professor is going to have an interview. So what type of answer he or she should give it, so that he will be or she will be selected in that company, especially because I can't say so much about myself, but I can say I have a lot of experience while attending interviews, especially in finance companies. So just stick to that what I am making. Please watch till the end. So again, I am repeating financial management. I have said you the meaning of this in the previous class also, or in the previous video I can say. So finance, as you know, is nothing the flow of money from the surplus area to a deficit area, and that includes also I have already said you cash, fund, money source, assets, you can say like that also. All these things I think you are knowing it already. So what the thing is that financial management also I have said you the meaning of financial management is nothing, is the branch of management. It's a way of management, you can say, or it is a part of management which is very important for the organization, especially. Why? Because without finance a business can't do anything. So to start a business or to maintain a business or to have a to have, if any businessman want to see or want to stable its future, first of all it has to think over its finances. So who especially the management of finances is nothing but financial management, which deals with the sources of fund and the application of fund. So again, sources of fund, especially from which source business is getting funds. Again, it's also important because choosing a sources of fund is not so easy task also, because a lot of things are there like equity and debt. Actually, when a company is raising fund, it has to either rise from the equity or debt, I can say that. So equity is nothing but as you know, from the a company has to divide its ownership through some rising shares. It has to divide the ownership and it has to get the fund. As equity, when the company wants to raise its equity or raise fund through equity, so what will happen generally? The cost of finance also increases because actually equity shareholders are the owner of the company, so they want more. Actually their expectation is very much important for the organization, as they are the they have they have the capacity to anticipate in the profit as well as loss of the company. But when we are going to debt part, actually they are the outsider for us, like we are taking loan from bank, or the business is taking loan from the bank or financial institutions, or issuing debentures or something like that, for which the business has to be at a fixed cost or fixed interest, I can say, and there is a definite particular period of time also. So when we are taking debt from outsiders, actually they won't think that the company is making profit or company is making losses, but because we have to refund them money at any cost with interest also. So they are not much bothered about business profit or loss. So we can give them a fixed rate of interest like 6% or 4% or 6, whatever as for the agreement. But if we are coming back to equity side, actually they are expecting more, as they are the owner of the business, they are expecting more profit. But during the losses also they can adjust, but it is not good because especially if the company will make a continuous loss also, they will lose their patient and they can withdraw their money from the company. So this is a very specific challenge for the finance manager, because the finance manager at last he has to deal with it. So either he will rise from equity or debt. So equity and debt. So actually this is the no one is responsible for this, especially finance manager actually dealing with these sources of funds and application of funds. Sources of funds I have already said you, like from which sources, either from equity or debt, you will raise the fund also. Actually by considering a lot of facts, either he will take equity or debt, or he will add both of, like some amount from equity he will raise, or some amount from debt he will raise. Actually, it depends upon the decision of the finance manager, because the decision may have adverse impact on the organization. Also it has a positive impact on the organization. After selecting the sources of fund, it has to go for the utilization of fund or application of the fund, where it will utilize. Either, actually, when we are coming back to the application, here is also two. That means actually you have to invest either for short term or for the long term. Actually, if you will invest that money in current asset or in, for working capital, especially if you will raise that from for working capital, like the company has to use that for with short period of time, that is within 1 year. If it will invest that from long term, like companies also have their own investment vehicle like mutual fund, or they'll invest in stock market, or any other project they will take, or any machinery they will buy. This is for long term. So here investment part is also two, like one is short term and another is long term. So the importance of finance manager is truly felt, like while choosing the sources of fund and while choosing the application of fund also, because it is also a very important thing. As actually when he is investing in somewhere, that means the return must be better than the cost of borrowing. That means the cost of equity or cost of debt, we can say. So this is also a very important decision for finance manager. Another important thing, actually, when also the finance manager has to think about the liquidity of the company, whether the company has adequate amount of funds or cashes to run its business for for a short period of time. So he has to look upon the liquidity also. Another two important things, that is profit maximization or wealth maximization. Profit maximization is like this, actually finance manager is not responsible for calculating the profit, how much profit, or actually he is not selling the products also. So he is not exactly looking out to calculate the profit, right? Either what he does exactly, he chooses a such source of investment or something like that, so that the company will generate a better return. So here rises the profit, so that the shareholder will get better return. Actually profit maximization is nothing but not taking or not giving out the dividend to the shareholders regularly, and keeping their funds so that the wealth of the company or the wealth of the shareholder will increase. That's it. So in the video I want to say one thing specially. I want to say one thing. So financial management, whatever I have told you, especially the meaning, definition, scope, importance, I have said you everything. So by points wise, I can say that it's nothing the main importance of the finance manager, or you can say the importance of finance management or scope of finance management. You can write making perfect liquidity for the company, increasing the profitability, increasing the wealth, or you can say wealth maximization also, reducing the cost. Cost means especially cost of capital. That means cost of rising equity either, or be it debt. So reducing the cost, reducing the risk also, you can say, because without risk profit is it is equal to impossible. When the company will make some extra profit, that means it has to take some risk. So reducing risk is also another importance of a finance manager, what he has to deal with. Reducing long-term stability of the firm. So I can say this is also a main importance of the finance management. So finance management is a very nice field to especially finance students. Though I cannot say that the students from the especially rural college or the regional college or local college, I can say, they directly may not get the finance manager post, because it's a very responsible post especially. So you can be an assistant to finance manager in the initial level, and then you can be a good finance manager in future. So by summing up all these things, I can say that financial management importance includes, like it is liquidity for the company, profit maximization, wealth maximization, reducing the cost, forecasting the future profits, making forecasting the stability of the firm or the company in the long run, and something, and choosing the sources of fund and application of fund. These are. So just stick to my video, don't get bored, because I will make a especially career option part, and especially I am making this video for interview purposes. So I must upload all the finance interview questions and how to crack a finance interview especially. So bye bye. अगर आपको ये वीडियो अच्छा लगा तो डोंट फॉरगेट टू सब्सक्राइब, like my channel and share my channel.